Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Tuesday, September the 15th. Well, a small-bodied candle today, and that means that on the day between the open and the close, the buyers have made smaller net progress than they have on the previous day. That says something perhaps about the viability of the first time frame uptrend that the market's in. And also we have a shadow on the top and the bottom of the body of the current candle. And that suggests sellers coming in as the market tried to trade up to the highs, and buyers coming in as the market tried to trade down to the lows. That's an indecisive candle. It's a spinning top type candle, and it suggests indecision. Although if we look at where the market closed in relation to the range, the market has closed between the mid-range level and the high, and that suggests that the buyers have some weak form of control of this market. Now, even though the buyers have weak control of this market, the shadow on the top shows that the buyers lost some of the commitment that they had when they were trading up at the high. So even though it's an indecisive candle, there are some elements of this candle that are bullish. There aren't really any negative candles except for the small shadow and the small amount of downside price rejection on the top of the candle. But the small body size also is a negative. Now, if we look at the trend, we still have a first time frame uptrend, even though yesterday's bar, in bar chart terms, was an outside day, which raises doubt about the trend continuing. But there were other factors suggesting that the market was positive, and with it being a fairly large green body, and the fact that the buyers closed up at the high told us that the buyers had control of the market when the market closed, and that they were strongly committed. Just looking at our Ichimoku indicators, we're a long way up above the cloud or the Kumo, and we're extending the distance between the highs of the current candle and the Kijun-sen and the Tenkan-sen. As we know, markets move from equilibrium to disequilibrium, and at the moment the market is in disequilibrium, and there will be a possibility eventually that the market will either congest or will retrace back towards either the Tenkan-sen or the Kijun-sen. That retracement or the congestion represents the market moving back to equilibrium, and the two lines, the Tenkan-sen and the Kijun-sen, represent equilibrium in two different time frames. The green Tenkan-sen represents a shorter time frame. The Kijun-sen represents a longer time frame, slightly longer time frame. We need to keep an eye on the low of the current candle, and that low coincides with this previous level of resistance at 1,044 that we identified. And we can see that the buyers came in there, so that sets that up as a solid area of support for this market now. If that area there at 1,044 is taken out to the downside, which, as we said, coincides with the low, and if we have a fairly bearish candle, there is a possibility that we will retrace part of this first time frame upswing that the market's in. And the first area that we should look for support is at the Tenkan-sen, which is at 1,024, and then at the Kijun-sen, which is at 1,017, and that roughly coincides with the previous area of resistance at 1,018, which will potentially act as an area of support if the market does trade down to that area. Failing that, we have many areas of support on the way down towards the cloud, and it'll be quite a lot of trading before the market trades down to any of those levels. So, overall, the market is still in a first time frame uptrend. There are some positive factors. There are some indecisive factors, so the high of the current bar or candle becomes very important for this market for an assault on this moderate resistance at 1,060, and we need to keep an eye on the low of the current candle for a potential reversal of the first time frame uptrend.